What is going on, Bitcoin Bulletin fam? We're diving headfirst into the biggest crypto news today, and trust me, you do not want to miss this. First up, the Bitcoin Spot ETFs are absolutely crushing it, racking up hundreds of millions in daily inflows for a solid 6-day streak. Is this institutional love the real deal? Then, get ready because Ethereum ETFs are heating up too, with BlackRock's ETHA seeing its strongest month yet. We're also tracking a massive wave of 92 crypto ETF applications waiting for SEC review, with altcoins like Solana and XRP leading the charge. Could this be the next big wave? And hold on to your hats, because U.S. lawmakers are meeting with crypto titans like Michael Saylor to discuss a strategic Bitcoin reserve. All while a new L2 solution, Bitcoin Hyper, is stepping up to handle the potential demand surge. Stick around because we're breaking it all down, and you need to know what's happening. Don't forget to smash that like button, subscribe for more, and ring that notification bell so you never miss an update. Bitcoin Spot ETFs are on fire, extending their incredible winning streak with another massive day of inflows. We're talking $260 million pouring in overnight, marking a phenomenal 6 consecutive days of institutional demand. BlackRock's iShares Bitcoin Trust, IBIT, continues to dominate, leading the pack with over $261 million in new funds, pushing its total to an astounding $60 billion. Fidelity's FBTC also saw a healthy $7.5 million inflow. While Bitwise's BITB experienced a slight outflow, its cumulative inflows remain strong. This sustained surge brings the total net asset value of Bitcoin Spot ETFs to over $151 billion, now representing a significant 6.6% of Bitcoin's total market cap. The daily trading volume is also robust, hitting $3.03 billion. This isn't just a flash in the pan. Earlier in the week, Bitcoin ETFs attracted $552 million in a single day. And it's not just Bitcoin. Ethereum ETFs are also experiencing a major resurgence. BlackRock's ETHA saw its best inflow day of the month, adding $363 million, and cumulative inflows for ETHA ETFs have now reached $13.7 billion. Analysts are pointing to this as a clear sign of strong, enduring institutional appetite for digital assets, even amidst market volatility. The broader crypto investment product market saw $3.3 billion in inflows last week, with Bitcoin and Ethereum leading the charge. This is a clear indicator that the institutional floodgates are opening wider for crypto, and the momentum is building. But what does this mean for the future of crypto regulation and market stability? Stay tuned as we delve into the explosive growth of altcoin ETFs and what the SEC is reviewing next. Bitcoin and Ethereum are holding steady, poised on the edge of a potentially significant Federal Reserve interest rate decision. Technical analyst Kevin outlined that Bitcoin is currently trading within a critical range, facing resistance at $125,000, and a monthly close above this level is essential to avoid confirming a bearish macro top. The total crypto market cap is hovering around $3.95 trillion, still below its historical fair value regression band, a level that has historically preceded major rallies. The current subdued market performance is largely attributed to the Fed's restrictive monetary policy, with high interest rates and aggressive balance sheet runoff. Many traders are frustrated despite Bitcoin's 73% year-to-date gains and Ethereum's impressive 250% surge, as capital continues to rotate rapidly with little sustained strength. The anticipation is palpable as the market awaits the Fed's announcement, with expectations of a 25 basis point rate cut. The tone set by Fed Chair Powell will be crucial. A dovish outlook could boost BTC, while a hawkish stance might dampen sentiment. The crypto world is watching closely, hoping for monetary easing that could unlock liquidity and fuel the next major bull run. But what happens when interest rates shift and institutional capital starts flowing back into crypto? We're seeing a massive wave of new ETF applications that could change the game entirely. The SEC is currently sifting through a staggering 92 cryptocurrency ETF applications, signaling an accelerating push for regulated digital asset access. This surge, up from 72 in April, shows asset managers are aggressively seeking approval for a wider range of altcoins. Key tokens like Solana and XRP are at the forefront, with 8 and 7 filings respectively, positioning them as major contenders beyond Bitcoin and Ethereum. Industry giants like Grayscale, Bitwise, and 21 Shares are actively involved, with some proposals even targeting Ethereum staking products. Excitingly, the Rex Osprey XRP ETF is set to launch this week, becoming the first U.S. ETF to offer Spot XRP exposure, with a Dogecoin ETF from the same issuer expected to follow soon after. This expansion isn't limited to just these tokens. Bitwise has filed for a Spot Avalanche ETF, and 21 Shares is proposing active crypto ETFs and leveraged products for Dogecoin and Sway. Analysts believe that the approval of these altcoin ETFs could unlock significant institutional capital, potentially boosting liquidity across major tokens and reshaping the market landscape. With all these new ETFs on the horizon, can the current Bitcoin network handle the increased demand? We've got news on how a new L2 solution is stepping up to the plate. U.S. lawmakers are convening with 18 top crypto executives today to hash out the details of Trump's strategic Bitcoin reserve. This high-stakes roundtable, hosted by the Digital Chambers and the Digital Power Network, includes heavy hitters like Michael Saylor of Strategy, Tom Lee of Fundstrat, and Fred Thiel of MARA, alongside mining executives from CleanSpark, MARA, and BitDeer, plus leaders from eToro, Off the Chain Capital, and Reserve One. The core objective is to brainstorm innovative ways to fund substantial Bitcoin purchases for the reserve without burdening taxpayers. This signals immense government interest and growing recognition of Bitcoin as a strategic asset, potentially driving significant demand. However, this increased adoption raises critical questions about the Bitcoin network's capacity. Currently, Bitcoin processes only about 6.71 transactions per second, a stark contrast to Ethereum's 21.94 TPS. During peak demand, this limitation can lead to network congestion, skyrocketing transaction fees, and a bidding war for confirmation, making smaller transactions impractical or even impossible. To address this, a Layer 2 scaling solution called Bitcoin Hyper is under development. It aims to make Bitcoin faster, cheaper, and more versatile, even utilizing the Solana virtual machine for enhanced programmability. This could enable thousands of transactions per second, transforming Bitcoin into a hub for DeFi, NFTs, and Web3 innovation. The native Hyper token is central to this ecosystem, offering benefits like lower fees, governance rights, and staking rewards, with projections of significant token appreciation. This strategic reserve discussion and the development of L2 solutions highlight the evolving landscape of Bitcoin adoption and infrastructure. But before we wrap up, let's quickly recap the biggest stories of the day. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin spot ETFs continue their incredible inflow streak, Ethereum ETFs are heating up, and a massive 92 crypto ETF applications are awaiting SEC review. Plus, U.S. lawmakers are discussing a strategic Bitcoin reserve with industry leaders, while Bitcoin Hyper is building solutions for scalability. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto updates, hit that notification bell, leave a comment with your thoughts, and follow us on all social media platforms for more. We'll see you in the next one.